Number 10 is Monster Beverage, jumping 4% after the distributor of energy drinks reported fourth quarter sales that beat analyst estimates. The results announced seem to validate the company's recent efforts to combat the onslaught or assault on its drinks and marketing practices. There's been a lot of negative publicity about this one.
Yes, there has been, although investors don't care about that today. Number 9 is TripAdvisor. It's up about 0.5%. Susquehanna's raising its rating on the stock to neutral from negative. The firm says TripAdvisor will benefit from a growing trend that online travel agencies are taking more share from the smaller players.
And coming in at number 8, it's Salesforce, falling 6% today. The cloud computing company's net losses widened during the fourth quarter as aggressive spending pressured margins. Salesforce also announced today its CFO, Graham Smith, will retire in March of next year after holding the job since 2008.
Number 7 is Pier 1 Imports, dropping 6% after significantly cutting its full fourth quarter and full year profit forecast. Pier 1 says the lowered guidance was due to recent adverse weather, which resulted in considerably softer store traffic, as well as some temporary store closings.
One bright spot in retail today came from the Gap. It was up just a fraction, though, on a fourth quarter profit beat. The CEO, Glenn Murphy, is working to maintain sales growth as apparel retailers have been cutting prices in an attempt to keep shoppers coming into malls. Of course, Gap has been participating in that. Gap also saying it's going to open its first Old Navy store in China on March 1st.
And coming in at number 5, it's 3D Systems, up about 1% after the company predicted that its revenue would hit $1 billion by next year, up from just $513 million this year. 3D printer stocks have been on the rocks since mid-January after the market leaders guided estimates downward, citing significant R&D investments, manufacturing and marketing costs. So it's interesting here. Their fourth quarter revenue up 52%, so that gives you a sense of just how fast the 3D printing business is. It was a huge year last year for the entire, if you can call it a subsector of 3D printing. But this stock down year to date, 19% already.
Yeah, you have to have a really strong stomach to invest in these 3D stocks because they have been so volatile, even just over the past several weeks.
All right, number 4 is Citigroup today, down about 0.5% after saying a fraud at its Mexican banking unit will slice $235 million from last year's net income. The city, which gets about 20% of its revenue actually from Latin America, has stumbled in the region before, so we'll see how it makes it out of this one.
Number 3, United, falling 3%. And the airline warns that a benchmark revenue gauge will decline this quarter due to severe weather. Blame it on the weather, just like everybody else. Winter storms have forced the cancellation of more than 22,000 flights at United.
Yeah, I'm telling you, the weather's going to catch up with people.
One retailer, though this retailer might be immune. Number 2, Joseph A. Bank gained 2% as the retailer agrees at last to meet with Men's Wearhouse to discuss a potential merger. The prospect of talks marks the latest twist in an almost 5-month takeover battle between the two purveyors of discount suits. You'll remember this started with Joseph A. Bank offering a hostile takeover bid in October to swallow up its larger rival, Men's Wearhouse.
Yeah, it's incredible how this saga is playing out, all for some suits. Okay, number 1 is Deckers, the maker of UGG boots, dropping 12% today after forecasting an unexpected first quarter loss. Deckers projects a loss of 16 cents a share for the current quarter. Analysts had estimated a profit of 10 cents a share.